Well, hi, everyone. Welcome to the Buffett and Beyond Saturday Stock Market Recap, and this is December 21st, 2024, and folks, Christmas is right around the corner. And this week, the market, well, with indicators pointing down on the major indices, and I really mean pointing down, Wednesday saw the market really break as we witnessed one of the worst days in a very long time for the averages. But fairly decent inflation data on Friday helped the Dow regain almost half of the week's losses. In our weekly stock analysis video, well, we visit our old friend Meta, and we have new numbers that just came out, and the direction of these numbers helped this stock gain about 260% over the past 2 years. Hey folks, we'll take it any day of the week. And with our ETF video, we show you a portfolio which is returning 6% per month, and 60% comes from the best stocks in the NASDAQ 100 ETF, and 40% comes from enhanced income, much of which came during this market decline this past week. And let's take a look at the S&P 500, and we can see the red lines on the top and on the bottom are volatility bands called Bollinger Bands, and we can see that we were at the top here, came down to the 20-day moving average, and then dropped like a rock below that band, then came back up and tried to break into it on Thursday, could not break above it. It did break above it during the day, but then closed below it again. And then finally on Friday, with good numbers from the inflation report, it closed up very nicely and closed up within that band. So what can we expect this coming week? Maybe a test of this band, and then we should be all right. But as long as it closes inside that band, we're doing good. Coming down here, we can see this blue line, which was headed straight down, now has turned a little bit. But folks, a lot of damage has been done, so it's going to take a little while to put a bottom in here. And if we look at the Dow, we see the exact same pattern. Came down, fell below that bottom band, which is very, very dangerous. Then the following day, tried to break up into that band, but then came down and closed below it. And then Friday, started below that band, came up and closed it up above that band at this 43,000 level. And folks, very, very nice return in there. And you can see down here, we are now in oversold territory, so maybe this blue line can turn around and we'll put in a bottom in here. Otherwise, we'll have to see. But when we look at this bottom in here, boy, it's been tested two times after it made that bottom right in here, so you could see it very, very well on the Dow. Very nice move on Friday. And then for portfolio protection, well, this Dow SPY 485 put expired on Friday, so we went out and we bought the March 21st SPY 500 put. So now all our three puts for this $140,000 portfolio are in place, and we are sitting pretty right now because we made money on the downside on some of our hedges, and we used that money to buy this March put, and we have extra money to spare to buy more puts in the future. So again, the December 485 put expired on Friday. Actually, stopped trading on Friday. It officially expires on Saturday. And we have the three puts that we need to protect this $135,000, $140,000 portfolio, which will protect it about 12% below the market. But don't forget, if the market starts to fall again, all of these puts gain in value as the market goes down. So it doesn't have to hit these levels for us to start making money on these puts. As soon as the market starts down, then these puts become worth more and more as we go. So we're sitting pretty on this one. So folks, we had an unbelievable week with Wednesday showing one of the worst days in a long time, but then that nice inflation numbers on Friday helped this market turn around, and coming into Christmas on Wednesday, and then the New Year's the following Wednesday, folks, we might be sitting very, very nice with the market, and maybe we'll get a rally out of this. We should see a bottom in here in the next couple of days. And hopefully going into January, we'll see what happens. The market will then calm down from all the holiday trading and the portfolios adjusting. And I'm talking about the hedge funds and the mutual funds and some ETFs that have to make any adjustments. So it'll be a little crazy in here over the next couple of days. But then in January, which is only a couple of weeks away, then we'll settle down and we'll see which way this market wants to go. But they're predicting some nice increase in earnings going into next year, or coming out of next year, I should say. And so the market should retain its usual 9 to 10% move coming into January with all the investments that are taking place and less regulation coming out. So we should be fine. But meanwhile, folks, we have a holiday that we want to celebrate. Be with your family, be with your loved ones. Just take it easy, and most of all, be safe. And folks, we'll see you back here 1 or 2 days next week, even with the holidays in between. So folks, take it easy. We'll see you in a couple of days.